Buybacks are controversial in some corners, but companies don't seem to be slowing down their repurchases. Here with more, Howard Silverblatt, Senior Industry Analyst, Index Investment Strategy for S&P Dow Jones Indices. So you guys have, there's some new data out here. 91% of company buybacks reported for Q1, and the grand total clocks in at $191 billion. That's an announced, for the quarter, an announced repurchase. But Q2 looks like it could possibly be a record. Is that right?
Yeah, well, Q1 has an outside shot. We don't think it. I think it looks more like 215, 216. Fourth quarter was the record at 223. This quarter, the one that we're actually in, that we don't have any reporting in yet, does look like it was active. Companies came in, they supported themselves through the right after the EPS season, as well as into the shareholder meetings, which they like to support and put out the positive news usually on the buybacks as well as that. But yeah, the buybacks are strong. We had 4 quarters in a row of records. This one probably won't make it, but the second quarter could. Either way, it is an enormous amount, and it's definitely buybacks are the favorite.
So we certainly anticipated 2018 will be a big year after the passage of tax cuts on the buyback front. Do you think this trend will continue as managements get comfortable with saying, we spent a bunch of money on our own stock and the market didn't punish us for it? Maybe we should continue, to lever up just a little bit, a couple turns here and there to continue to add to those gains for our existing shareholders.
Well, 2 parts. One, they have the ability to do it, which is really important. They've got cash. The industrials by themselves, $1.4 trillion. Cash flow is decent, even though the earnings, beat the lowered estimates that we had there. So the numbers are there, the money is there, and institutions are pushing them. Individuals want more for dividends, but the buybacks are basically a win-win situation short term. When you do it, you have more buying, supporting your stock, even if it's going down, you've got more buyers in there. And if you do enough of it any quarter, you reduce your share count, increase your EPS. So there's not a lot in here. Companies have been hyping it up. The only item on the horizon potentially is from Washington. Yeah. If they do something. Legislation looks difficult with the makeup you have there, but just the discussion could be a difficulty and a wrench in there.
So Howard, I love the technical analysis that you do as the S&P continues to blow through new records. And I'm wondering what you've observed in your time watching this index in terms of the change from an industrial-led index to a lot of these FANG stocks kind of driving the market so far, especially when you talk about cash flow just now. And we're seeing the likes of Uber and these huge, large companies go public now that are, not the same story when it comes to their ability to, disperse capital, for example.
Yeah, obviously, those companies are not within the index at this point, but you could do the comparison to the late 90s for the boom when it was all measured on hits. Companies, you were happy if they just had a PE that wasn't negative, much less revenues on there. So it is definitely a different kind of a makeup now. But as far as the big caps go, they've got the cash. Numbers are still good. The interest rates are low. You can even go abroad, go negative if you want. So there's very little to stop them from doing it. They're going to have a reason to stop the momentum. And it's broad within, not just the top heavier items that we read all about, but, right down to small cap companies.
You touched on this a little bit with buybacks being a win-win, that you get the reduction and that can help on the earnings, short term, help on the earnings front. What does your research show? Because I think in sort of the controversial part about buybacks, people would say they're just juicing their earnings by buying back stock. They don't have good fundamentals. That's what's happening here. Is that what your research shows? What percentage companies actually get a tailwind from repurchases?
Well, we use 4% as a significant number. So if you had a 10% increase because of the EPS, you have 14. So we use 4 as a relevant number. It starts to change the EPS and the PE, all the evaluations. 1 in 4 companies, over 25% of them, had at least a 4% increase for the first quarter, compared to about 13.5% year over year. So the number is high. Again, it's broad. The companies do that. And again, 1 in 4 are adding to that. And it's important that investors look at it. The companies now put it out. This is not 2001. So you can look at the EPS and see what the increase is and go a little higher up, you get the net. You do not want to pay the same multiple for a company doing the buybacks on the EPS as compared to growing your business, sales, margin, costs.
From the data, are you seeing an earnings recession based on Q1 so far?
No. Q1 was similar to Q4. We lowered the estimates enough in this case. So Q1 was down 7.1%. We came by and beat that. We're still 3% off where we were a couple of months ago. We're not seeing that going forward. Q2 still looks like some difficulties in there, but an increase. the numbers go for Q3 and 4 to set records, but we're not there yet. This week, next week will be important because we have a lot of meetings going, and if we see any guidance, and of course what happens with the trade in China situation.
Howard Silverblatt, always good to see you, Senior Index Analyst, S&P Dow Jones Indices.